Hi, everyone, and welcome to another Twitter Spaces Roundtable hosted by Morningstar Ventures. This week, we're actually going to revisit the topic of DeFi and talk about how it has the potential to mold the future of finance. And as we are in the midst of a regulatory crackdown and also seeing, centralized crypto institutions like Coinbase and Binance face pressure, we actually wanted to talk to three experts about what they think we can expect from DeFi projects in the short and also in the long term. So joining us today to talk about this is Ian, the co-founder of XLD, Michael, the CPO of Skynet Trading, and Ahmed, the CEO of Hatom. For those who have not joined us before, I am your co-host Naini, and co-hosting with me is my colleague Peter. And what we usually do is we'll talk to our guests for about 30-40 minutes about the topic at hand, and then we leave about 15 to 20 minutes at the end of the session for our audience. If you guys have any questions throughout the session, please do feel free to put them in the comments. And always towards the end, you can request to speak. By the way, this usually only works in the mobile function. And then you can ask your question directly to our guests. We understand that there's a lot of fans of the project sometimes that dial in, but just for the integrity of the spaces, it would be great if your question could be a bit more about the topic of DeFi rather than very specific to the project. All right, that was the intro. So without further ado, I would like to pass the introductions over to our expert guests today. Michael, Ian, and Ahmed, welcome once again to our Twitter Spaces. Thanks again for joining. We're excited to have you here on our second edition of the DeFi Talk. And we'll get started with a brief round of introductions. Tell us a little bit more about yourselves and also what you are working on in crypto. Ian, why don't you go first?
Hi, everyone. My name is Ian. I'm the co-founder and CEO of XLD Finance. We're actually a project that aims to create financial tooling for the on-chain future. What our very first kind of on-chain tooling that we're building is a ZK based payroll solution. We've realized that there's not a lot of kind of practical real world use cases for ZK. And one of the things that we found as an opportunity is payroll. Not only that, we're actually also building a couple of financial tools that will help crypto natives to actually use their crypto in the financially regulated space, and vice versa as well, making kind of financial services more efficient on chain. Previously, I spent a big chunk of my career in consumer fintech, so regulated space, and my focus is really kind of building inclusive finance, like financially inclusive products in the past, and that's also my passion.
Great. Always happy to hear more about inclusive finance, and we'll definitely touch upon that topic throughout the spaces. Michael, you're dialing in from Skynet. Why don't you give us your introduction?
Hey, Angie. Yeah, sure. Thanks for having us. So I'm Michael, CPO at Skynet Trading. The name already says it a bit. We're a trading firm as well as designated market maker, which basically means we're not directly a crypto project, but more on the facilitation and sidelines of things. We facilitate liquidity on centralized and decentralized platforms, as well as work together with a lot of crypto projects on their liquidity needs, making sure that their tokens are tradable, that their users are able to buy and sell the tokens, as well as helping projects with their liquidity strategies in general.
Great. Thanks, Michael. And last but not least, Ahmed.
Hello, everyone, and thank you for having us. So my name is Ahmed. I'm the co-founder and CEO of Hatom, which is a DeFi ecosystem built on Multiverse. So Hatom presents an array of innovative products like liquid staking, lending, and borrowing. And we will soon introduce an over-collateralized stablecoin native to the Multiverse X blockchain, a lending as a service, and X equals an index of a leveraged liquid staking strategy, among various other ventures that are on our roadmap.
Thank you, Ahmed. And I would like to start our conversation with more personal question to our guests. As you are all building projects and businesses within the DeFi space, what DeFi tools do you use on a daily basis, of course, besides your own, and how does it compare to the centralized solutions in the crypto space? Jan, do you want to take this one first?
Right. So I'm actually kind of pretty conservative these days about kind of participating on DeFi. I'd probably the only one that I probably use super regularly is probably OpenSea, but that's hardly you hardly consider that DeFi. And it's mostly like research tools like DeFi Llama and things like that. That's what I use on a daily basis. I guess how does it compare to the centralized solutions in the crypto space? I guess I mean there are certain kind of, I won't name names, right, but kind of centralized solutions there that are a bit more kind of stable, which I find myself using, and it also depends on kind of which market that you're participating in, and if there are certain features that are probably the best for that market. That's what I would probably usually use. I find myself actually, this is a kind of a reflection point, right? Even with like DeFi tools, very smart people coming up with new protocols and mechanics, we are still very much rooted in the real world. That's kind of a recent, or at least an ongoing reflection of mine, despite being in the space.
Great, very interesting take, and that's also an important point of the regulation and regulatory platforms that we will cover a bit later. And Ahmed, what about you?
Sure. So let's say that I'm a great DeFi believer. Let's say that besides Hatom, I also use like different dexes, like including Uniswap, Exchange, like for my daily trading activity. I know that we are not there yet, but I believe that DeFi still has the potential to revolutionize like the financial industry, because it offers like a number of advantages over traditional finances, like including like decentralization. So DeFi protocols, they are not controlled by any single entity, which makes them like more secure and resistant. They offer transparency, like all transactions are public and can be verified on chain. They're also like cost effective, like they are let's say cheaper than traditional financial transactions, and they are like more accessible. Like the four protocols, they are open to anyone at any time. They don't require like any manual intervention to access like specific features. So yeah.
Interesting. And last but not least, Michael, what do you think?
Yeah, so I think from our perspective, it's maybe a bit different than most of the projects building in the space. But obviously, as a trading firm, we consume and trade on a wide range of decentralized venues. So that's one. So we trade on DEXs, but we also provide as well as consume Oracle data, so decentralized pricing data or other data points that are available. And obviously these strategies, oftentimes together with our counterparties, we act as liquidity providers on these platforms, so on decentralized venues, and then use these venues together with centralized venues essentially to provide the best trading experience as we can. So in that sense, I would say we're using DeFi actively, and building strategies around DeFi or that integrate with DeFi applications every day. But we also see a lot of drawbacks currently, I would say, in the DeFi ecosystems that we operate in. One is obviously sometimes a lack of liquidity. Others are accessibility or availability of infrastructure components that institutional players need. Like secure wallet management, permissionless bridges, native stable coins, those kind of components are really necessary for an institution to operate in the DeFi space, and I feel that there are steps to be made in this respect on a lot of protocols. I do think they are, we're in the process of getting there, but I think there's still a lot of room to improve there.
Thank you, Michael, for the rich answer. Funny that I firstly asked more about the personal experience, but you gave us pretty extensive breakdown the tools for institutions that are lacking in DeFi space. Thank you so much for that. And moving more to the state of DeFi industry right now, the FTX scandal happened almost 1 year ago. We all remember that. It's hard to forget. And since then, we have seen more people looking towards DeFi solutions to manage their assets. And given the time that has passed, where do you think we are right now regarding DeFi adoption? And have your projects and companies seen a positive surge compared to 1 year ago? Who wants to take this one first?
I can. I could start. So from our perspective, I would say that we saw quite a bit of interest, especially directly after the FTX collapse and everything that followed from projects willing to improve the trading experience for retail, basically on the centralized exchanges. So that was one thing we definitely noticed, and an uptick there as well. I do think that, and this can be seen in the data as well, that in the past couple of months, liquidity has been sparse on most exchanges, the decentralized ones that is, but also some of the centralized ones actually. So while I think directly following FTX, there was definitely an uptick and a surge in usage of DeFi. You also saw the number of daily users increasing. This has somewhat subsided again. Which I think, I've said this in some other places as well, is that crypto does seem to have a pretty short time span or retention span of negative news, basically, where if something happens basically in a few news cycles, we've forgotten mostly about it, and we start using the centralized applications again like nothing is wrong. So I think that is part of the reason. But then also a bit on what I mentioned earlier, in that a lot of the tooling needed for larger players to operate in the DeFi space is oftentimes not there or not built out properly yet. So I think once those hurdles are overcome, we'll see significantly more DeFi usage, especially from institutions.
Thank you so much, Ahmed. What is your take on it? And as you during the last year, you passed path from the testnet to mainnet and the full product launch.
Sure. So I do agree with what Michael said. What I also think is that after the FTX scandal, let's say that the interest in DeFi has also increased, as people are looking now for a more decentralized and secure way to manage their assets. It is putting out the light on the importance of DeFi and decentralization, because sadly, not your keys, not your coins. As for the DeFi adoption, well, it has been steadily growing in the past years. I think that the total value locked in DeFi protocols as of now is above the $50 billion. So this growth, I think, that has been driven by a number of factors, including the rising popularity of liquid staking derivatives, decentralized exchanges, DeFi lending and borrowing products, and also the concept of DeFi composability in general. Because users now have the ability to participate in various protocols and services at the same time, which led to innovative and also unique financial products, attracting both experienced traders and also the novice ones. So for us, as for Hatom, we have been live. Last year, we were on the DevNet, and we have been live for only 4 weeks now. And within just 48 hours of the mainnet launch, we have managed to amass over $100 million as a total value locked. I think that this growth highlights the increase in demand for DeFi products and services among the community in general, and especially here on Multiverse X.
Ian, go ahead.
Right. Sure. Yeah. So yeah, I actually kind of echo their sentiments, but I'll probably come at it at a different angle. So, um, back in like earlier this year, we were actually building out our APIs that allows people for direct on ramp and off ramp. Yeah, to allow like centralized exchanges and larger protocols to do on ramp and off ramp to fiat for and crypto for their users. And when we were talking to these centralized exchanges, a lot of their focus was really just trying to grow and retain their user base. So definitely there was kind of a shakeup, and obviously they've actually had to kind of focus on certain markets that they felt would have the most volume and most valuable users. So that's kind of what we've seen. Specifically on tools, I think one of the biggest impacts of FTX that we've observed, because we're in the payroll business, is that a lot of projects, or a chunk of projects that are Web3 projects, had a big chunk a big chunk of their dry powder wiped out because it was stuck in FTX, right? And then the SVB happened as well. So I think one of the things that we're seeing is actually a lot more projects using custody solutions, right? Like Fireblocks, Gnosis, and instead of actually keeping their treasury, a chunk of their company's treasury on these centralized services.
Yeah, you definitely see a lot of trends that are moving in that direction. And I think what you guys were saying is also very just. Like, we are definitely seeing, again, a surge in DeFi, and it's making it actually quite interesting to see where the space is going to be moving to. Ahmed, I actually wanted to circle back to you and talk a little bit about being a pioneer in the Multiverse X ecosystem and also having just recently launched. And previously you were mentioning that there are a lot of unique protocols out there that offer, various different services. And with Hatom, you guys have included, liquid staking, lending, and also borrowing services. Now, when you guys were creating the protocol, what were some of your inspirations? Were you looking also at specific chains or different projects? And were there also mistakes that you saw in those chains and projects that you definitely didn't want to build into Hatom?
Sure. So let's start, among the things that we were looking for in a blockchain, basically for building Hatom, is the technology, basically. So the Multiverse X blockchain offers a good, or let's say an even unparalleled scalability and performance. So it has a superior transaction throughput and reduced latency, which is crucial for our projects and also for the future of the blockchain once it reaches a stage of mass adoption. Then there is the security aspect. So Multiverse X uses native tokens, so they do not need a dedicated smart contract. It enhances the efficiency of token transfers, as there is no need to execute heavy smart contract logic for basic token operations, which also reduces transaction costs and time. On top of this, it also minimizes the potential attack vectors that can sometimes be associated with complex smart contracts. So then what we did, first we started by developing a lending protocol. We then continued our course by also developing the main liquid staking solution of the blockchain. And our protocols, they were inspired from projects that have withstood the test of time, and we have meticulously studied the different existing protocols, the pioneering ones on other blockchains, to learn from their mistakes. So to give you some examples, in Hatom, we only list highly liquid assets in our lending protocol. which means that these assets can be traded on multiple large exchanges. And it means that in order for the price of those assets to be manipulated on the lending protocol, they need to be manipulated in all the different sources used to push the price on chain. So by that, it can be Binance, Kraken, Crypto Compare, Gemini, and so on. In addition to that, when we list less liquid assets, such as the UTK token, we put a supply cap on it and apply an aggressive collateral factor. So this enables us to restrict the amount of that particular asset that can be supplied and used as collateral for loans. So when we list assets that are liquid on other blockchains but less liquid on Multiverse X, like Wrapped BTC and Wrapped Ethereum, we set a borrowing cap. So this limit, on borrowing, helps ensures that liquidators can easily liquidate those positions using the blockchain's liquidity. And it adds an additional layer of security, despite the fact that these assets can be easily bridged to facilitate liquidations. An additional thing that we also did, so we have a mechanism in place for price manipulation. So what we do whenever a transaction is broadcasted on the lending protocol, we compare between the safe price with the safe price that is provided from the X exchange and our price aggregator price before using it on the lending protocol. So we are using basically two price feeds. If the price difference between the two sources falls within an acceptable range that we are setting, the price is deemed valid and is relayed to the smart contract to allow the transaction. On the other hand, if the price difference exceeds a certain limit, it then sends the most recent valid price to the smart contract to allow this transaction. So we don't use that false price, let's say, and all future transactions will fail. So this mechanism avoids having any manipulated price being used inside the lending protocol. It emits an event and allows us basically to intervene and monitor the situation to see if the difference in prices is due to the market conditions or if there is something that needs to get intervened on, basically. So yes, actually, we learned a lot from the mistakes that have been made from previous leaders in the space.
Thank you so much, Ahmed. That's very insightful and thoughtful, and maybe very, very useful for people who want to interact with Hatom protocol. My next question is to Michael, and let's move a little bit back to your take on lack of tooling for institutions in DeFi space. From the perspective for trading company, and you also have a VC under your umbrella, like corporate umbrella structure. What is your take on the VCs and trading companies and institutions not only investing in projects related to DeFi space, but even using DeFi tools to create their own investment strategies? Do you practice it on your side, and what is your take on availability of enough tooling and enough liquidity in the space?
Yeah, of course. No, happy to give some color there. So from a trading perspective, I think I've mentioned quite a bit of it already. Obviously, apart from the actual trading tools such as decentralized exchanges, liquid staking platforms, borrowing, lending, those are the actual on-chain trading tools that you can use. There are also, of course, a lot of things hanging on the sidelines, like DeFi analytics, on-chain unlocks, which are possible or which are basically visible because things are happening in a decentralized manner. What I mean with that is that vesting contracts. So, for example, firms that have token unlocks coming up, those are typically public information, so that everybody has an insight in this. So from a VC perspective, this changes the game quite a bit, of course, because everybody knows what is happening and can anticipate what is happening, which creates a whole different dynamic than when this was when initially this was less transparent and the dynamic sort of around unlocks and those kind of things changed. Now everybody can anticipate this, and I think that creates a lot more of a fair market, because you can price in this kind of information, of course. Then also as a VC, it's very interesting to see the kind of developments that we see in the liquid staking space, because this allows you to, dedicate part of your portfolio to liquid staking, whereas the name implies your funds are still liquid, although you may have to pay a small slippage if you want to liquidate them quickly. But this gives you a lot more opportunity to hold and stay with skin in the game in projects that you may otherwise not have had. So that opens up a lot of new possibilities in that sense. And then, of course, in the DeFi space, you have the opportunity to also, as a VC or as a private equity fund or any other firm that is not necessarily a trading firm, but with crypto exposure, you actually have the opportunity to act as a liquidity provider, right? Either through passive liquidity provisioning in the standard Uniswap V2 AMM pools, right? The XYK bonding curve, or even in concentrated liquidity, where you can actually actively manage the ranges in which you provide liquidity and thereby more efficiently use your capital by basically in generating fees on that liquidity. And that's really interesting, I think. It does come with its own set of risks, of course, right? There is smart contract risk, and in the case of liquidity provisioning, you have risks associated with impermanent loss that may or may not outweigh the benefits that you get from the trading fees and then any other incentives that you may receive. But this opens up a lot of avenues for capital firms, venture capital, but also private equity or anything like that, to basically deploy their capital and keep stakes in the tokens that they invested in, while also still getting a yield on those tokens and basically actively using the tokens. And I think that's really interesting and is basically something that is not possible in a traditional finance world. So that's a real innovation there. And I think VC firms, especially as we do get the institutional tooling that I talked about earlier, this will become more and more standard practice and can really drive a lot of innovation. So yeah, that would be my take on it.
And Michael, do you have any projects at the moment that you're particularly impressed by that are like moving into this direction, or any projects that you think are just impressive in general in the DeFi space?
Right. Yeah. Well, we can name drop a little bit here, but obviously we as Skynet EGLD Capital work with Ahmed and his team on who worked on the Hatom protocol. So we're very impressed by their work. I think lending, borrowing, as well as liquid staking. And liquid staking in general is one of the key components of a healthy DeFi ecosystem nowadays. Like it allows you to basically use the funds that you commit to secure the network, right? And I think that's a really good thing. You can use them in other places, and it helps a DeFi ecosystem mature. Then more generally speaking, so without naming specific names or anything, I'm very interested in protocols that basically allow you to refract or split the yield components and the principal components of structured products such as the LP tokens. So an LP token, right? If you provide liquidity, you get an LP token. This token gives you right to the underlying assets that you provided in the liquidity pool, but it also has a yield component, right? Which are the swap fees, as well as any potential yield that you may get from a project incentivizing you to provide liquidity. Now, this is really interesting because these two components you could separate them, right? There may be somebody that says, hey, this yield that you will get on these tokens will go down in the future. Somebody else may say, hey, this pool will get used more in the future, which means that the trading fee component actually goes up. And then you can bet on both of these components, right? And that's really interesting. So what you see here, a project that did this is Pendle, for example. They do it in the Ethereum ecosystem, and they just got listed on Binance. I think those kind of protocols are really interesting. These kind of things are also sort of unique, I would say, to the crypto DeFi ecosystem. So those are areas that we look at. And then there are a whole range of more exotic products where protocols are turning impermanent loss into impermanent gains by allowing you to trade those components. I mean, those are very interesting innovations. I think we're at a very early stage with respect to their applicability and people using them. But once the space matures and there is enough liquidity to actively trade these products as an institution, then that opens up a whole new bracket of trading strategies. And, nobody knows where that will lead us. But I think it's really interesting because it allows people to really tailor to their risk appetite, choose a trading strategy that fits their needs.
Definitely. Thanks for elaborating, Michael. Ian, I would also like to hear a little bit from you, coming from a payroll and financial service provider. Something that we see often is obviously a barrier of entering the space, especially I think DeFi having its complexities to it is a space that isn't always as quickly adopted as we would want to. Do you have an opinion as to why people or also businesses might still turn to traditional financial services or even centralized financial solutions instead of DeFi?
I think my simple answer here is it's not very intuitive, and it's basically habit, right? I think a lot of institutions and even kind of retail or / consumers are used to kind of managing finances a certain way, and one of the biggest things that people need to kind of have is basically a good sense of context, right? So I mean, if we look at Uniswap as a protocol, I think we take it's so simple, right? You basically, there's just a few fields, you click swap, you kind of sign stuff, and then the transaction goes through. It's very simple, but for you to even get to that point, you need to understand how wallet works, how to connect your wallet, and kind of gas fees and things like that. So I think that's holding a lot of adoption back. And so yeah, I think that's one of the biggest drawbacks, which is, I think, quite a shame, because there are so much advantages to DeFi, even kind of the fundamental kind of foundational components, like just like stable coins, right? And basically the nature of the blockchain, right? It doesn't matter if the wallet holder is regardless of any geography, right? The blockchain basically abstracts geography, and what this, like, one big kind of practical application of that is cross-border finance. Basically, it doesn't really matter where the owner or the kind of the company that's using the wallet. It's just there. You can be in the Philippines, you can be in you can be in Amsterdam, you can be in Dubai, and it's basically your USDC is still USDC no matter where you are. So I think it's such a shame. There are certain kind of things that I think onboarding, I've touched on that, right? Like being able to onboard effectively. I think that's a huge gap. So for example, like a traditional company, when they would actually want to kind of store their assets, they want to have some sort of KYB, right? Like they want to, the KYB, know your business process, basically tells them that this is a legit operation, and then if something happens to the product, or sort of happens to them, they actually have kind of a warm body on the opposite side of their screen, or maybe they can call someone, right? I think that gives people a lot of comfort, and that's the thing, right? It's a huge trade-off, right? If you want to be free, if you really kind of want to harness the power of DeFi, you have to be ready to be self-sovereign. And I don't think that a lot of users, and I don't think a lot of companies are ready for that responsibility. And I think it's really fear driven by kind of a lack of fundamental understanding, whether it's being intimidated, right? Whether being intimidated by the technology, all the buzzwords and things like that, and also kind of their actual understanding of how the technology works. So I think that's kind of what's holding people and institutions back.
Thank you for the extensive answer. especially totally agree on the UX barrier that has the DeFi space has for now. But that's great to see many projects and many technologies developing on that front to simplify DeFi space. And I would like to touch the next topic that also so far is a barrier for many people and especially for many institutions to enter DeFi space is regulation. So we always, when we speak about DeFi, we have to speak about regulation. And because it has been a big topic within our industry over the past months, not only past months, the past years, basically. And in your opinion, taking into account all recent happenings with the centralized players and the news about regulations in the European Union, how will regulation impact the future of DeFi? And do you think regulation can help accelerate the mainstream adoption of DeFi solutions?
This is honestly a very difficult question. Perhaps I'll kind of speak first because I've been working in kind of regulated finance for a big chunk of my career. I think that so I think one of the biggest parts of that regulation will impact kind of the industry is in two levels. One is at the project level, and you're seeing kind of projects focusing or leaving certain geographies depending on kind of what their regulatory posture is. I say posture specifically because they haven't, some of them, some local some regions or countries have not even released like actual regulation yet, but basically based on what their regulatory leadership kind of spells out, basically they're taking signals off of that, right? So I think that's one of the things that companies will have or projects will have to be very wary of, is kind of will depending on where their users are, depending on where their team is working, that's kind of something that they need to keep in mind. The second component is actually relates to actual user acquisition and retention, right? Because one of the ways that the regulators can basically kind of choke kind of DeFi, right? Depending on what their stance is basically the on ramp and off ramp, right? Basically the veil that basically kind of lets people move from fiat to crypto and vice versa. And I think those two are really, like, philosophically, I'm getting philosophical here, attached to the hip, right? Because if there's no real world value to the assets, or you can't kind of price it relative to kind of how we view things in the real world, then your then your crypto assets, your assets will just basically be computer money. You know what I mean? So I think that's kind of in the most basic way I could put it. And I think it will depend really on kind of how the industry will respond to this. Perhaps there will be a more degen side that will say, we don't care about regulation. We'll figure out a way to kind of get value into this, and it's going to kind of add a lot of friction. But I think there will be a very loyal, kind of very concentrated a user base that perhaps will generate a lot of value. But then there might actually be some kind of parts of the DeFi space that may say, "Hey, sure, I think the trade-offs of being regulated, which is consumer protection, better visibility in the public, legitimacy because governments and regulators are supporting this certain project. I think that's also going to, there are some parts will actually will accept it. If you were to ask me what is Ian's position on this, I think I am just waiting and seeing, right? Because I think that regulation has always evolved, and I think over time, over the past like 100 years, we actually see certain regulations hit inflection points, right? There are so many things that could potentially happen, and the thing is that you just need to be ready to adapt in terms of kind of how you approach it at the project level, and basically what you kind of believe is the best thing to do for your users and for your project's kind of long-term viability. That's what I think about the question.
Sure, let me hop in here as well. I agree with a lot of the sentiment that Ian expressed. I think adding to the veil, there is another component actually to the DeFi accessibility part, not just fiat or anything else entering the crypto market through on or off ramps, but there's also the UI component where basically you see a lot of geo blocking, you see geo blocking starting to happen at the UI level. So while these DeFi applications are of course accessible at all times by anybody, they are permissionless in general, which is kind of in the name, right? It's decentralized finance. That does not mean that they are accessible for everybody at all times. Most people basically interact with these protocols through a UI, right? I would say that 95% of the users, the unique users that use Uniswap, for example, use the Uniswap UI, which means they have to go through a web page, a web application to basically access and trade on any given pair. These gateways, so these UIs are subject to regulation, I think. So if a country were to basically expressly take a stance against DeFi in general, they could force these front ends to geo block people in their jurisdictions. So that's another risk, I would say, that overhangs the DeFi ecosystem, because like us as an institution, we trade through APIs, we trade through software connections. It's all done algorithmically. We don't really touch these UIs. So you'll also always be able to interact with this, but that's simply not the case for the general population. Then another thing is for me, when we talk about regulation, I think currently we're mostly speaking about the lack thereof, right? There isn't really a lot of regulation, at least no clear guidelines. I think a lot of companies, especially looking at the US regions, have been trying to get clarity on which assets they can trade, which assets they cannot trade, in which kind of sales they can participate, in which they cannot participate. Like all these questions are still pretty open, and it feels like for the most part, I'm not sure if this will be clarified in the near term. There are some promising developments, I think, because I think yesterday or the day before, the Fed actually announced that they were forming a new committee to basically look at cryptocurrencies and digital assets. This may, I don't know, but indicate some shift away from responsibilities from the SEC. If so, I think this would be promising, because this is an agency then dedicated or committed dedicated specifically to cryptocurrencies. I think that's interesting. Don't know where that will lead, but I hope it will provide some clarity. But then again, I mean, in the EU, for example, you get MiCA, which obviously will change a lot. It will have an impact on stable coins, which are basically the blood of DeFi ecosystems. So that will definitely impact how DeFi will be able to be used, especially by institutions, because there are caps on how much of, at least currently, as far as I know, in the proposed legislature, there are caps on the volumes and number of transactions that stablecoins can process on a daily basis, and how much you can process as an institution. So that will all obviously impact how DeFi is used, because without stablecoins, it's relatively difficult to transact value in a DeFi ecosystem. So I think for now, I echo the sentiment of Ian. Like wait and see. I think there's still so much to be developed and frameworks to be made, that it's currently hard to estimate where this will go, honestly. I think personally, on a personal level, I think most of the risk currently lies in the stablecoin ecosystem. I think that there are questions about reserves and all that kind of stuff, but then there are also broader questions as to whether a government like the US or like China will ever allow a decentralized currency to be used in the way that we might want it to. Like if this is a fundamental stance that they will take, that no, they don't want this, then that's going to be very difficult and may be inhibitive of further DeFi developments. I don't hope this will happen, but that could be a scenario. At the same time, I think having regulations aimed at centralized exchanges may actually drive people towards DeFi. So that's the flip side of the coin, right? In the end, because it is permissionless, if you have the tools to do so, you can always interact with these protocols. So there is really a balance there. But for me, mostly it's currently not regulations, but the lack thereof. And the stance, I think, is indeed let's wait and see.
So from my side, let's say that I completely agree with the opinion of both like Ian and Michael. Like the topic of regulation in the DeFi industry is indeed like a tricky and complicated one. Let's say that on one side, like with clear regulatory guidelines, let's say that institutions might feel more comfortable participating in DeFi. This would not only like bring more funds into the space, but also like legitimacy, further, let's say, catalyzing mainstream adoption. And the ambiguity surrounding like the legal status of many DeFi projects can be a barrier to larger institutional participants. So clear regulatory guidelines can provide clarity, potentially leading to like an increased stability in the market. So yeah, I also think that like strict regulations can make it like more challenging for new protocols to launch. And the regulations on top of that, like they are often region specific. So while one country might have a strict regulatory regime, another one might adopt a more let's say easier approach. So this can lead to a regulatory arbitrage where DeFi projects move or base themselves in, let's say, more favorable jurisdictions. So if I were like to conclude, I would say that while like there are wide concerns about how regulation might impact the DeFi industry, I think that it's also possible that the right kind of regulation, like like the one that understands and respects the decentralized ethos, while at the same time like safeguarding like users, it could accelerate like mainstream adoption. So it's a delicate balance to strike, but if it is done correctly, it could benefit the industry as a whole. But yeah, let's see how things will develop in the future. Actually,
Thanks for the conclusion, Ahmed. You took our job away, but that was a great way to summarize everything on the last question about regulatory. Peter's laughing about the regulatory landscape. We do have a couple more questions for you guys, but we also don't want to take the time away from our audience. If you have any questions for our guests, please feel free to put them into the comments section. And in the meantime, I see that Chris has requested to talk, so add him as a speaker to ask his question. This always usually takes a while. So in the meantime, while Chris is connecting, I just wanted to let you guys know that always about a couple days after the session, we usually write a recap, which is written on our social platforms, and you can always refer to those and also read the 3 key takeaways of each speaker. So that's also something that we provide if you are more of a reader than a listener. We're still waiting for Chris to connect. Maybe in the meantime, while he's connecting, do you guys have any, I wouldn't be doing my job if I didn't ask, do you guys have any alphas for us or something that we could be looking forward to as many community members are dialed in? Ahmed?
sure. So from our side, like an exciting thing that we are currently like working on, and that we hope will soon be available on the mainnet on Multiverse X, is an over-collateralized stablecoin native to the Multiverse X blockchain that is aimed to resolve the stablecoin liquidity inside the blockchain. Actually, so the liquidity in stables is up to like $20 million in total here on the blockchain, which is like really low compared like to any ratio on any other blockchains. So we have some exciting things that are prepared many modules that will be launched along the stablecoin that will increase its utility. And yeah, that's it. It will come soon. To not give like too much detail, but we aim to make it something big, and the goal is to make it the most used stablecoin on the blockchain, basically, and to have like all pairs paired with it in the future.
Thanks for the sneak peek, Ian. Michael, what about you guys?
I think for us, might not be super, probably not super aligned on Ahmed's and Michael's projects, but I think one of the more interesting solutions that we're building is actually kind of a way for us to actually link bank accounts into and stable coins, which will actually make your like global on ramp, off ramp, and settlement experience much more convenient. So I can't talk too much about it because it's hitting the regulatory space. But do follow our page. They're one of the speakers, XLD, for more updates in the future.
That's like we're a bit of a different kind of project or company, of course. But that's some interesting alpha there. I think linking assets is really interesting. We're actually seeing that more and more, where also exchanges, together with infrastructure providers like Fireblocks, are offering service where you can keep your exchanges on chain or your assets on chain, but actually use them on an exchange. Like, I think these kind of solutions are really interesting. I'm not sure if that's where you're aiming at or looking into that direction, but that's really interesting if that's the case.
Something like that, yes.
Yeah. Okay, that's really cool. That's interesting, and really necessary, I think. So yeah, keep it up, I would say. I think from our perspective, like we provide trading strategies, trading solutions, or liquidity solutions. Mostly, what we are working on currently are integrations between and across different protocols and blockchains. So that's a lot of what our work is currently going into. Because as we talked as was also highlighted in this session, for a lot of people, it's really hard to use DeFi applications at the moment, right? Even indeed using Uniswap can be very challenging for somebody, let alone using these applications across different blockchains, right? You may want to pull some liquidity from the Multiverse X ecosystem and then pair it with some liquidity on Solana or Ethereum, right? This is all very difficult. So we're working together with a lot of with some partners and protocols that are basically simplifying this, not using actual bridges, but more like a signaling system across blockchains, where you shift liquidity from blockchain to blockchain on a basis where you don't have to lock up this liquidity in pools, which then can be exploited, which we've seen in the past. So there are some interesting things happening there on the cross-chain ecosystem. So that's where a lot of our work goes into, and I think could really enhance the user experience of traders in the next cycle.
Thanks, guys. In the time that you guys were telling us a bit more about your projects, we actually got a question in from our audience. So the question is, what do you think about AI and how it might affect the future of DeFi?
In 2023, we have all spaces with questions about AI. So
yeah,
nothing we can do with that.
This question.
And that's an interesting one, of course. Depends, of course, a little bit on how we interpret AI. I would say, like we use machine learning and AI modeling in all of our trading strategies, right? We backtest the information all the time, or backtest trading data and all various sorts of data all the time. This could be called AI. Maybe it's the integration or usage of sort of ChatGPT like assistance in helping you navigate the DeFi landscape. I think that could be very interesting, right? If we have a sort of a chatbot that we can ask how to bridge or how to transfer assets between blockchains, how to generate a wallet, how to secure that wallet, those kind of things. If we have that kind of AI functionality, sort of what we see in ChatGPT at the moment, I think that would be amazing. So if nobody's building this, I suggest somebody to pick this up, because that's probably going to take off with the whole bot and AI narrative at the moment. I think apart from that, for me, it's currently a bit hard to envision how AI, other than the advanced machine learning algorithms and those kind of things, prediction algorithms are of course machine learning and AI. Those are already there. I think things might have sped up in the past months, obviously because there's a lot of interest in AI. But I think they are simply one of the cornerstones upon which DeFi is built, and have been for quite a while actually.
I really agree with the thought on the basically the support chatbot, like chat GPT style of onboarding, right? Because I think it's very unintuitive right now to kind of, if you are just by yourself, you don't have any friends who are deep into crypto, or crypto native friends who walk you through it. I think that's going to actually be such a big boon, right? Because it's not intuitive to kind of understand. You'll have to Google how to kind of open up your a wallet, right? What are transaction hashes, and do those actual basic questions. And I think that's going to be a huge help, right? To actually, instead of letting people walk through a manual, you can make them have a bit more of a human experience, kind of engaging and getting started on their journey with DeFi. So like, I really agree with that sentiment.
From my side too, let's say that I completely agree with that. I support the idea. Like it will feel like having a personal assistant that will be there to help you like understand all the functionalities, all the features of each like specific platform, and that's going to be like a super good thing for like in the user experience actually. Another thing where AI could be used is, for example, in risk assessments, and to be used basically to analyze like on-chain data and develop or define the best parameters to be used like in DeFi protocols too. But yeah, that's pretty much my take on the question.
Multiple use cases for AI in the future. And Marco, we hope that your question was answered. Thanks, guys, for jumping on that. And yeah, that's pretty much almost the end of our session. We covered a full hour. It's been super insightful talking to all of you, learning more about what the future of DeFi holds, and also getting it from a perspective of builders in the space, venture capitalists. So it's always good to see different perspectives. As said, the session was recorded, so you can always hear it back on Twitter. If not Twitter, you can also find it on Spotify and Apple Podcasts. And yeah, we have these sessions about once a month. We have also interviews that happen one-on-one with our colleague Sabi. He always talks to interesting founders in the space, a little bit more about their inspiration, and also how it was starting their projects. And yeah, we're always really excited to have great guests on. So thanks again, guys. It's been a pleasure talking to you, and have a really great rest of your day.